JJ the CPA here. Hope you're doing well. So let me give you some top tips for S corporations, both for the small business owner that has an S corp and that tax professional. At the top of my list is reviewing reasonable compensation for the year that we're going into. Reevaluate it. I'm going to give you a link in the body of this video where I spend some time kind of breaking that down based on my experience and my opinions. The other aspect is that for the amount of health insurance that was paid out of the S corporation, hopefully you know this, but it has to be included in the W-2 of that S corp owner. Now, it only gets included in box 1 of the more than 2% shareholder. It is not subject to withholdings or any kind of Social Security or Medicare tax in terms of the payroll. And then it is disclosed in box 14 so that it can be deducted down at that individual level. So it can't be a M1, it can't be an AJE, you can't fudge on it, because if the IRS were to inquire of it and you had the S Corp pay the health insurance but didn't include it in box 1 of that W-2 for the shareholder, well, then it's not a deduction, which means there would be a tax adjustment. Now, should you be afraid of this, right? It's a big bad wolf coming on this? No. But it is kind of easy for the computer system at the IRS to kind of know or guess on this, which is you have a EIN for your S Corp and you have a Social Security number for you. When you get a K-1 from an S corporation, it has both those numbers on it. When you get a K-1 and then you get a W-2, well, has the same information, the EIN that paid it and the Social Security that then received it. So anytime I've had an audit in the past of an S corporation, it is always what they ask for, and we've always had it reflected. Well, what do you do if it hasn't been done? Well, pretty easy, because remember what I said, it's not subject to federal withholdings, it's not subject to Social Security and Medicare taxes, but you would need to file a W-2C for corrected. And pretty simple. You just would update box 1 and box 14. You would add to box 1 the health insurance that was paid by the S corporation. And then guess what? The S corp gets to deduct that wage. And then down at the individual level, that S corp owner is going to pick it up as a wage. And it doesn't sound fair, but guess what? On Schedule 1, they are able to deduct that amount of health insurance as reflected in box 14 of that W-2 as a deduction. So it washes, but it ultimately then allows that S Corp to deduct the health insurance as a fringe benefit in wages, which goes on line 7 for officer compensation, which then reduces down that ordinary income, reduces down box 1 of Schedule K-1, which then reduces what goes on Schedule E, page 2, that flows to Schedule 1, that boom, Schedule Form 1040 is reduced by. So that's where you get the deduction. But you would want to protect it. And so I have clients, and every once in a while, somehow it gets missed. Well, we just file the return, we reflect it, we do it properly, and we get the W-2C filed. No harm, no foul, but needs to get done. Also, I just want you to note that for S Corp owners, if you're using your personal vehicle for your S Corp, meaning on behalf of your business, I just want you to note the only way that your business gets that deduction in any way, shape, or form is if it reimbursed you miles. So for fellow tax pros that are doing an AJE or a reclassification of distributions, well, I don't know that you'll ever have it inquired upon, but at the end of the day, if there is an IRS inquiry in general and they find that, it's such an easy denial of the deduction because it wasn't anything paid by the business. And mileage, that rate, right, it's just a phantom calculation. So with that being said, make sure that you are getting that actual deduction by actually reimbursing yourself just the same as any other employee. Also, for S Corp owners, there is not a home office deduction for you. That is only available on Schedule C. Now, once upon a time, before the law changed going into 18, you were able to get a home office. Now it would only be a deduction as an itemized deduction on Schedule A, and it was a miscellaneous itemized deduction that had to exceed 2% of your income. But there is no provision for you to get a home office. You are then not in the running to get that deduction that we see on Schedule C. So make sure that that's not something that you're taking advantage of. Now, here's the other thing, S Corp owners. With that, make sure you're gathering up and reporting all the income regardless of the number of 1099s or the amount on your 1099s, because you got to pay tax on what you receive. And then on your deductions, the biggest thing is it related to your business? But the second is, did your business pay for it? So when you hear that, it's not based on the receipts you have. It's based on what did the business pay for. So if you don't have a separate bank account for your S Corp with that EIN on it, you need to get after that and get it done pronto. With that also being said, when we're talking about an S corporation, you must have receipts to, in essence, show what the expense is. Like, what did the money get spent on? You need to have bank statements to show that the business paid for it. And you need to have credit card statements to show that whatever was charged on that credit card that the business account ultimately paid was all related to business. So you need to have all of those things. A canceled check, a bank statement, and a credit card statement into itself is not enough to substantiate the expenses. Also, reasonable compensation, taking distributions, not often. Distributions represent net income. Reasonable compensation, as I indicated, I've got a video, give you a link to it in the body of this to check that out, because we know with an S corporation, the net income is not subject to self-employment tax, the big advantage over Schedule C. So we don't need to be scared of this. We don't need to put ourselves in a position where we think that the IRS is going to come after us. What we need to think about is just doing what the IRS asks, which is pay a reasonable wage to yourself as the owner. It's based on effort. It's based on affordability. It's based on reasonableness. So with that being said, here are the things that I'm coming across. Thought I would share it with you. And it is, if you can see, a way to ensure that you're doing everything correctly. All right. Hey, thanks for tuning in. I'd love it if you'd subscribe. And then don't you ever forget, you've never met a CPA quite like me. You have a great one.